Hey everyone, Dave here with Dave's Market Explorer. Welcome back to the channel. Today, as of mid-June 2026, we're taking a clear-eyed look at the market outlook for the rest of the summer and into the fall. We've been tracking a potential correction window roughly June through August, with a secondary window extending out to October. The core cycles and timing models driving that view haven't shifted. Even with recent developments around the Straits of Hormuz, the inputs to our broader risk model remain intact. Let's break it down step by step. First, the geopolitical piece. The Straits of Hormuz situation has seen a ceasefire announcement and talks of reopening following the earlier disruptions. Oil prices pulled back on the news, Brent around the $80 level recently, but the market impact isn't a clean reset. US crude inventories have been drawing down sharply for multiple weeks, sitting well below 5-year averages. Experts are warning that rebuilding supplies and normalizing tanker flows could take time, keeping a floor under energy costs and potential inflationary pressure. This doesn't erase the supply tightness story in the near term. It's still a wait and see on how quickly things normalize and whether we see any residual spikes. That ties directly into our risk model. Time and timing models continue to highlight this summer period as vulnerable. We're in a historically weaker seasonal window, May to October, layered on top of midterm election cycle dynamics and stretched positioning in equities. Breadth has been narrow, with gains concentrated in a handful of names, particularly around AI themes. A 10% correction from recent highs is well within the realm of normal, and many analysts have been flagging elevated downside risks through the summer months. On the policy side, we now have Kevin Warsh as the new Fed chair, sworn in back in May. His first FOMC meeting is right around the corner here in mid-June. Markets are pricing in a hold on rates, but all eyes will be on his tone, projections, and how he navigates lingering inflation pressures, especially with energy costs still elevated from the earlier disruptions. Warsh's background and approach will be a key test for how monetary policy evolves, particularly if data shows any stickiness in inflation or softening in growth. This adds another layer of uncertainty into the summer window. Looking at the broader picture, the bull case for equities remains rooted in strong AI-driven earnings growth. S&P 500 earnings estimates have been revised higher, and the long-term runway for the AI build-out is still compelling. However, risks are skewed toward volatility, potential IPO activity, think high-profile names, concentrated gains that could unwind, rising long-term yields if inflation doesn't cooperate, and the possibility of a rotation or pullback as investors reassess valuations. Bitcoin and crypto have shown some resilience as a diversifier at times, but they're not immune, facing their own cycle dynamics, ETF flows, and macro sensitivity. We've seen pullbacks amid the broader uncertainty, but the scarcity narrative and institutional interest provide a longer-term backdrop. Putting it all together, my base outlook remains cautious for the next few months. We're still in that June-August correction window, driven by seasonal weakness, timing models, policy transition under Warsh, and lingering energy inventory dynamics. A healthy pullback wouldn't be surprising. It could even set up better risk-reward later in the year or into 2027 if the cycles play out as expected. The secondary window into October keeps us watchful, especially around any election-related noise or data surprises. That said, I'm not calling for a crash. Markets have proven resilient, and strong fundamentals in tech and AI could support a floor. The reopening dynamics around Hormuz are a positive development that could ease some pressures over time, but near-term normalization lags mean we stay prudent. What should you be doing? Stay diversified, keep cash or dry powder ready for opportunities, manage risk tightly, and focus on high-quality names with strong balance sheets. Watch key levels on the S&P, Nasdaq, and Bitcoin. We'll be monitoring Warsh's communications, inventory reports, and any follow-through on the ceasefire. This is a time for process over prediction. Stick to your system, respect the cycles, and avoid emotional decisions. Corrections are part of the game and often create the best buying opportunities for the next leg up. Thanks for watching, everyone. If you found this helpful, hit the like button, subscribe, and drop a comment with your thoughts on the summer outlook or what you're watching closely. As always, this is for educational and entertainment purposes. Do your own research and manage your own risk. We'll catch you in the next update. Stay sharp out there.